This episode is always my favorite. It means the house has been purchased, it's been fixed, it's been financed, it's been marketed. We have a successful offer, we made it through inspections and got to the closing table. It's payday. This has been a tough market with interest rates rising. My business model for years has been one where I depend on excellent contractors to deliver me a great product on time that sells quick. It hasn't been selling as quick. Buyers have either been scared, picky, or greedy. Houses have to sell in order to buy new ones. So at times, I've had a cash crunch working on up to 14 houses at once. My margins may have been less than usual, but in some cases I needed my cash out in order to buy a better deal. Regency is no different. This house in this condition is worth $500,000 all day, but I got $177,000 cash when I sold it, which I look at as two deals that I won't get if I don't sell this house. So I ended up selling it for $475,000 with $10,000 in concessions, $35,000 less than I could have got, but I still made $40,000 in profit. Getting back the $177,000 was worth it as I bought 3 houses in December. 2 will be ready for the spring market, so I'll get top dollar, and 1 was the nearly 5,000 square foot beach house that I'll Airbnb. So let's go through the numbers of Regency. I pulled these numbers from 5 sources to my profit sheet. Send me a DM if you're interested in a copy of the profit sheet. It's one of my 4 favorite documents. The first source is the purchase HUD. This will tell me the purchase price, what credits came back to me in prorated property taxes, rent backs, transfer taxes to close, settlement fees, any loan origination fees, attorney document preparations, and prepaid interest. The second source is the sales HUD. This will tell me the sales price minus real estate commissions, buyer concessions, settlement fees, taxes, HOA fee dues. Both of the HUDs will be prepared by the settlement company. The third doc I internally generate, which is expenses. This will list my utility bills, holding costs, material costs, and labor costs. If you have a Home Depot Pro account, you will get an email every time you purchase, and that PO number or property name you'll be able to look up and research the material costs. The fourth document is a term sheet, and that's provided by the lender. They will provide you this document at the beginning of the deal. This will tell you your loan amount and what your rate is. This is all you need for the profit sheet purposes. However, I also use this sheet if I use a construction draw. It will tell me the amount of the draw, what I have available, as well as what funds are needed at closing. The fifth document, if necessary, is the lender payoff sheet. This will tell you if you've taken any construction draws, and if so, what the new loan amount payoff will be. In many cases, I've completed 90% of the items, and it's not worth getting another draw, so they reconcile it on their end. As a side, I keep a monthly net worth sheet. This is my favorite document ever. It lists my flips, my rentals, my partnership deals, loans I have out, and unsecured loans people have given me. For my flips, I list what money I have in the deal, repair costs, holding costs, estimated profit for a total cash out when I settle. This number normally matches what I will have on the HUD one when I sell, so long as it's close. I don't worry if I'm a couple $100 up or down. I expect everyone that is working with me to be competent at their job until they prove otherwise. So I stay in my lane, which is talking to sellers, putting together deals, and talking to you. I let the lender do their job, I let the title company do their job, and the numbers always match up. From here, it's just plugging in the numbers into the profit sheet. While the HUD looks like a lot of numbers, it's easy once you go through it a time or two because it's pretty well organized. I have done a separate video on interpreting a HUD. Feel free to check it out, it'll make life a lot easier. On my profit sheet, I have calculations built in that come up with a profit at the end. My mind works to improve efficiency. How can we be better? We can always be better. A profit sheet smacks in the face, so let's quickly look at the Regency profit sheet. The top line, 197 days from purchase to settlement. This is terrible. I usually expect no more than 120 days. 60 for repairs, 30 to get it under contract, and 30 to settle. For Regency, we were a little late getting started as we were working on other projects. This was the cause for the delay. In this case, even though it was inefficient, it didn't cost more than $5,000 extra in holding costs. I can't emphasize this part enough. There's real cost to closing and holding real estate. To make light of this is foolish and it will cost you a lot of money in the long run. Most new investors only think of repairs and agent fees, but there are holding costs, 2 closing costs, and concession costs. I'm transparent with these costs to sellers and they understand. They may not like it, but they understand. I emphasize that they'd have similar costs if they were sold it themselves or with a realtor, and these costs are not made up. For Regency, my cost of purchase, lender fees, settlement company costs, transfer taxes, 3 months prepaid interest, attorney doc prep fees, origination fees add up to $17,000, and you just add that to the purchase price. So we go from $325,000 to $342,000. Repair costs were $55,000. Additional holding beyond 3 months holdback was at closing $9,500 of what I paid. Concessions to the buyer at settlement was $16,222. Real estate commissions were $13,375. Seller settlement costs $2,800. Total expenses were $96,897. So total money in was $342,000 at the purchase price, plus $96,897 in expenses, which equals $438,897 in this deal. The final sales price was $475,000 for a profit of $36,103. Cash is king. The cash back I got was $177,735.65. In this market, it was more important to have cash back than eke out an extra $10,000 to $15,000 to $25,000 in extra profits a few months later. Thanks for watching. We're already working on the next season. It's going to be a double wide on 10 acres, but when you see the inside of this, you're going to want to move in there yourself. If you want to see more pro tips, please like and share and comment on this video and give me a follow. I do these videos for you, my fellow investors. So if you have any questions about real estate, or maybe you have a question about a deal that you're working on, please write me in the comments below or direct message me. Thanks again. Until next time.